we have a couple of new picks for next week. The first, we have a couple of bearish calls. One is on Credo Technology Group. They're reporting Monday after the close. We're bearish on that. The second is Campbell Soup, which is reporting Monday before the opening, and we're bearish on that. But interestingly, very interestingly, just given all the talk about the consumer and what's happening with the consumer and the court decisions around tariffs, we are very bullish about Dollar General. They report Tuesday morning, and we have a bullish call on DG as we think that the price action as compared to short interest is very bullish for that stock.
And that would run counterintuitive, in my view, since they import a lot of their stuff from Canada. Maybe it's oversold. I mean, what do you think's going on there?
We just think that this is a very short-term signal. It's only good for a day. And the way we look at it, the way price action is reacting as it runs up to earnings in comparison to short interest, it leads us to believe that you'll see a pop in the stock for that day, that one day.
Okay, that's good. What else is on your plate, Bob? Anything good?
Well, we got a couple of different things. I think it'd be a great time to talk a little bit about what we spoke about last week with Jim Chanos. I mean, I don't know about you, but boy, I could have listened to him for a really just an amazing amount of time. He's so prescient and, often early on a lot of things.
He's very early. Listen, if you want, he's, as most people know, he shorted Tesla. The stuff that he raised on Tesla was maybe wrong at the time, but you can see those concerns popping in the stock now. Clearly popped in the stock when Elon was doing the Doge stuff. People were like focusing micro on all the production issues that Jim brought up. So I mean, Jim Chanos' research is usually really solid. This is not an easy game calling a short on any big stock, particularly a stock where there's a lot of motion surrounding. Remember, Elon was a darling of the political left by when Chanos was shorting the stock. Chanos, by the way, is no rabid right winger. He just saw the numbers, right? I mean, Chanos, I believe, a staunch Democrat based on what I know about him.
100%.
But he saw the numbers. Yeah, so he saw the numbers. He didn't like what he saw. And I would say a lot of his concerns are bearing some fruit right now when you see some of the stuff going on with Tesla. His call, as if you tuned in last week, was on MicroStrategy. He went short MicroStrategy and long Bitcoin because he believed there's a huge, am I saying this right, delta between the two that needs to collapse?
That's right. That's right.
Is that the trading
price is equivalent to the stock?
Like a Goldman Sachs trading desk right now or something?
Well, it's interesting to me is that the thing he is shorting is a hedge. He's creating a spread trade on a company, and he's realizing that the spread is very large. The cash to the actual underlying, the stock to the actual underlying, in this case being Bitcoin. And he's creating a nice arbitrage for himself. And, one of the things that we wrote about this week is that there's a lot of copycat trading going on. So Jim has started this trend where people are saying, yeah, if I go out and buy Bitcoin and I issue shares, the public, this is very much the way like foreign shares and ADRs work out. So the locals can only buy what they can buy. And that's why the whole ADR market was created. So what's happening here is that if you don't have a wallet and you're not familiar with Bitcoin enough and you don't want to go through the hassle, you buy the shares. And this is creating an arbitrage, which Jim has been exploiting, and that's the trade he put on. So a very interesting change, I would say, of what he's highlighting for himself as a spread trade, rather than just an outright short. Although he did mention IBM, which, I think got a little lost in the shuffle and is very interesting play on AI and its effect on those businesses that are consultancy heavy and body shop heavy. So I thought that was a great interview. And, there's a lot of stocks out there. There's Mara,
we
Riot,
should point out that over the past week, like Microstrategy has been down. So
That's right.
Bitcoin, so remember, he's a long-term, his shorts are long-term,
Exactly.
Bitcoin over the past week. Bitcoin's down a little too. MicroStrategy is down more. Bitcoin is essentially flat.
Right. Well, maybe this is a good time to introduce my fellow colleague and someone I've been working with a long time. Ihor Dusanowski is the head of our predictive analytics here at S3. Ihor, welcome. It's great to have you on.
Great, thanks.
Ihor,
Thank you for having me. What was that? Sorry.
Yeah, we were just wondering if the AMC apes have screwed with your mic, but I guess not.
No, that was years ago. That was a fun time. With
they forgot about you.
And
Right, they forgot about you.
Never
forgot about
yeah.
Unfortunately.
Ihor,
You guys are sitting pretty far. I got to follow Jack Devine and Jim Chano.
Well, listen, he's called you out and called your research out many times on X. It's not unusual. He did that last week too. We have a new fellow here, Sam Pearson, where Jim actually read the piece and said this was a nice write-up. So he does read stuff, and he's read your stuff and been very complimentary. Ihor, tell us a little bit about MARA, Riot, and CLSK. You have a very interesting take on these spread trades that are going on and the copycat trades.
Yeah, these are all Bitcoin and blockchain trades. What you've got is a huge momentum push in a lot of these names that is really pressing up the stock price more than the value of the stock. It's not just a fundamental play, and that's the key. You're not looking at the fundamental value of the company. You're looking at what the investors are doing to the stock. And that right now we're seeing a big premium to stocks, to equities, as opposed to the actual cryptocurrency. So, and Bob mentioned it. He says, there are a lot of people who don't want to go and open up a wallet and figure out how to save a 52 symbol password and go through all these problems. You know what? I'll buy MicroStrategy. I'll buy Riot. I'll buy Mara, and I'll get my Bitcoin exposure there.
Ihor, so let's transition to something that you've been working a lot on. We've been talking a lot about it at S3. One of the things that's very, very, very important for every investor to understand is the structure of not only the long positions, but the short positions as well. And we've done a lot of work. And one of the more fascinating things about data, and we'll probably do a show about this later in the summer. Hopefully we can get, we've got our feelers out to some great data people that really understand why data is so important, because you hear about it more and more and more when you're talking about investing in markets. We need data. And one of the things that we've been looking at is the long market is something like 85 times larger than the short market. However, what's happening to a lot of really widely held stocks is that the amount of tradable long position and the amount of short position, a lot of the times are equal, or they're in a very interesting proportion. And Ihor has written a fantastic piece, which we will drop and put this on X for people to read. It's a wonderful piece. And Ihor, maybe you just want to walk the audience through some of the battleground stocks, what you're seeing, how we're looking at this as a firm, and how it can be useful to those listening in today.
Sure. I mean, bottom line is you have a company's float, but 3/4 of float is held by passive investors, pension funds, ETF providers, and stock holders that never sell their stock. They're just buying and holding. So really, you only got a handful, around a quarter of the float that's trading in active hands. So I don't care what some of these big holders are doing with their stock. I care about what the hedge funds and these big active traders are doing, because that's the dollars that are hitting the tape and actually moving stock prices. So I want to know where you got big shorts where you got big longs in the active hedge fund community, because that's where you got volatility in stock price.
And
So you've got stocks like Microsoft, which it's just a major long, virtually very little short selling. But then you've got some of the battleground stocks, which means you've got a lot of long hedge fund holdings and you got a ton of short hedge fund holdings in the same stock. So basically, whatever happens in the news, whatever happens in the momentum, you might have capitulation on one side or the other. So you can have these big moves in stock price. So let's talk about some of the battleground stocks. We're talking about Moderna, Sirius, SoFi. You got MSTR. You've got S3AI, AMC, HIMS, Kohl's. I mean, you get all sorts of stocks. Novavax. But those are the names where if one side capitulates or the other side capitulates a little bit, you've got a huge run in the stock. So what we say, Charlie, you mentioned before, the delta, the changes in stock price, the changes in momentum. There's also something called gamma, which is the rate of change of change. So things can be going really, really smoothly, slightly up, and all of a sudden shoots up or shoots down. That sudden change is really important to investors. It's a really important thing for investors to monitor, saying, hey, I'm gaining weight or making or losing 3, 5, 7, 8%. The big problem is, do I have a 20% loss on the horizon or a 20% gain on the horizon?
And just to make this clear, you make it clear which of those stocks are vulnerable to all that, right? In that piece.
Yeah. So I basically in my report kind of said, here are a bunch of stocks that are big long holders. Here's a bunch of stocks that the shorts are really in. And here's the stocks in the middle where who knows what the hell's going to happen. But when it does happen, this is going to get a big move.
Oh man, got to read that. That's must read. Eeyore, thank you. Appreciate your time. I'll see you on Twitter. Stay out of trouble. Stay away from AMC. No, just kidding.
No, you're right. Take care. Thanks for having me, guys.